We're going to get into how you're building out this business, how Juniper adds to the networking side. But for now, the AI systems, the server unit, how is profitability to improve?
Well, good morning, Carol, and thanks for having me. We are very pleased with our quarter. It turned out to be very solid with record-breaking performance on revenue, and we expanded profitability sequentially. And to your question around the server segment, we deliver what we said we will do. But most importantly, our traditional server business returned to a historical level. And so when I think about Q4, we're going to see a return to approximately 10% for the quarter because of that momentum in traditional servers, which, by the way, grew double digits year over year, and the balance of AI mix between sovereign and enterprise, which now represent more than 50% of our orders compared to the service providers.
So the AI server bit, is that set to improve? How more broadly is the AI systems profitability improving as we see this monumental build-out of infrastructure?
Well, as I think about the AI servers, I think it's important, Carol, to think about different customer types and how we participate in each of the segments. So we think about the service providers and the hyperscalers and the model builders, where a lot of the capital expenses are taking place, to your point. We are now going to lead with networking for AI. We are extremely pleased. We closed the Juniper transaction. Juniper is already a reference in many of those build-outs. And that's how we're going to lead in that particular segment of the market. And we're going to sell the server compute platforms with our partner, where it makes sense from a profitability perspective. But what we saw in the last couple of quarters, in particular this quarter, sovereign and neoclouds and enterprise now represent more than 60% of the market. There we participate in a slightly different approach, which the margin profile is different. We lead with a rack scale integrated architecture for the sovereign space, and we lead with an integrated solution for enterprise. Enterprise grew for the 7th consecutive quarter, and we doubled the number of logos. And then in sovereign, we grew more than 250%, and we won some marquee deals in the Middle East.
Antonio, that might be the answer, actually. I've studied the traditional server business and the storage business, and you're doing better than your peers, Dell, NetApp. But why are the dynamics better for you when you have these analogous businesses with those other names I mentioned?
It's multiple things. First, in the enterprise traditional server, we see a refresh cycle taking place for edge infrastructure with more richly configured servers. And we have two phenomenal platforms, which is HPE ProLiant Gen 11 and Gen 12. We did a fantastic job in really hitting the sweet spot of the market with better performance per core, lower energy consumption, better security, quantum proof for that matter, and true workload optimization. And so now, as we go to the Gen 12, that AUP continues to grow, and the ability to attach services is much higher. As I go to the storage business, we really transformed the entire industry, in my mind, by deploying a consistent architecture, whether it's structured data, block storage, or whether it's unstructured data, which you need for AI, and that's what we call the object data with file ingestion. So the customer can do one investment with a peace of mind as they grow their data needs for AI. So I think that's what's resonating in the market. But ultimately, we have a fantastic go-to-market. We play in 172 countries, and that reach together with our partners is a major differentiation, in addition to the fact that GreenLake provides true AI-driven lifecycle management and observability.
Those are the things specific to you. Antonio, would you give me an outlook for enterprise IT spending? And because we have a lot of macro uncertainty right now, and you must see in the pipeline how that uncertainty is really manifesting.
I will say, based on our pipeline, first of all, it's solid across the three segments we participate: network and server and hybrid cloud. It is uniform across the three geos. There was another question in another interview I did, how North America versus others are doing. North America did very, very well for us this quarter. And so I think the demand will continue to be there. Every enterprise has to modernize. and deploy AI. We as a company are deploying AI very extensively. We see the productivity improvements across many functions and many businesses. So that will continue. But at the same time, there is a way to modernize the legacy by freeing up space, power, and cooling so you can deploy this new technology. So we are very confident about the outlook. And with Juniper, that outlook becomes even stronger because now we have a complete portfolio networking that makes us unique as we want to build the best networking business in a modern, secure, cloud-native, and AI-driven portfolio.
And you're expecting to cut costs. I think we're seeing $600 million in cost savings are expected by that combination, Antonio. Cost savings are necessary for many businesses right now as you think about some of the pressure from tariffs. Your bird's eye perspective on how much that's implicating your business right now.
You have to have a mindset of continuously transform the company. That's a fact. And, the future belongs to the fast, I said all the time. But at least $600 million in synergies is related just to the Juniper transaction. And I reiterated that yesterday. And then there is an incremental $350 million through three key strategic levers. Continue to optimize our portfolio, continue to optimize our workforce, and aggressively deploy this set of technologies. And at the core is not just a cost takeout, is a way to improve experiences and become more efficient and agile in this market, which you have to react in the moment. So we are very encouraged about what we're seeing. And Juniper actually gave us the opportunity to rethink some of the processes we have had for a long time here.
Antonio, I ask you this every quarter. How's the relationship and partnership with Nvidia? But as Jensen Huang would see it, right, for the supply chain and the partners, they give great visibility to future iterations of product, right? They commit to the annual cadence of new GPU. They're increasingly involved in the networking through NVLink. Is anything changing for you because of the way that Nvidia operates generationally, technology to technology every year?
We have a fantastic, strong partnership at the company level and at the personal level. Jensen is available in the moment. If I need something, he picks the phone and we chat and we solve it. But I will say the following. I think from a collaboration perspective, from a co-engineering perspective, the proof of that is our AI factory for enterprise with a private cloud AI. We actually took a very different approach together with Nvidia. We integrated the entire Nvidia AI suite of software inside our GreenLake cloud. We took a software down into infrastructure, and together we provide an integrated solution for our enterprise customers. That's a testament how you co-engineer the fact a lot of the value is on the GPU, but reality is the software and the experience that you deliver. On the other hand, now with networking, we have another set of opportunities because above the NVLink and the Spectrum X you referred to, you need a full data center architecture. Nvidia does not participate into that. Our major competitors obviously are Cisco and Arista, but Juniper has become the reference for many of these large AI deployments. But I do believe together with Nvidia, we can do a better job in the way we deploy that CapEx, and we run that infrastructure from an OpEx perspective using AI technologies for that matter in full managed network. So we are very excited about that. And look, in the last quarter, we announced new innovation together with Nvidia, the RTX 6000 Pro, the latest Ultra, Blackwell. We are committed to be time to market with Jensen and team.
I'm interested by the adoption of generative AI by the companies that are helping it become a reality. Of course, it benefits your share price, which is near a record high, Antonio. But how is it benefiting your employees? Or indeed, how are the pilots running? Because there's been a lot of questions about whether there's been efficacy there since the MIT report.
Yeah, I think it's fair to say, Caroline, we went from generative AI to agentic AI. And I think about agentic AI as the next evolution for what really enterprise needed. And my view is that agentic AI will transform business processes by simplifying them, automating them, and then bring intelligence to it. In our company, we are using agentic AI aggressively in our offers. So GreenLake Intelligence, which we announced in June, is one of the most comprehensive clouds That includes agentic AI and observability in the way they deploy and manage infrastructure and so forth. On the other hand, as a company, we are deploying agentic AI across finance. Our CFO is incredibly aggressive on this, so she's on the leading edge on this. Our marketing team uses for demand generation and brand campaigns and targeting segments where it makes sense. And our services team is used to provide better support experiences. In our supply chain, we use it for forecasting and planning. And there is many other examples of that. And so I think this generative AI now became agentic AI. In the future, of course, will be the robotics part. But the productivity level we're seeing is pretty significant. And we are not proof of concept. We have deployed more than 60 use cases across the company, and we have more than 200 in testing as we speak. Some will fail, Caroline, and that's fine. And the mentality there needs to be fail fast and improve and focus on our return on invested capital.
Antonio, you've been CEO since the start of 2018. Where does HPE sit today relative to your big vision for what HPE is, can, or should be against your peers?
When I became CEO, Ed, I had the vision to be an edge-centric, cloud-enabled, and data-driven company. We invested at the edge, was the Aruba acquisition, and we delivered tremendous value for our shareholders from $750 million revenue all the way to over $5 billion. And obviously now the next move was the acquisition of Juniper to make this company a networking-centric company, because I believe the next AI era here is the convergence of networking, cloud, and then obviously the business process that we all run as an enterprise. And that to me is the core foundation that have been envisioned for our company going forward. And on that core foundation, we deliver the best cloud and AI experiences. So it's continued to be shaped. I'm very pleased with the progress. But let's not forget, it's not just the vision itself. It's how you execute with a culture and a set of values that makes us unique. And HPE has been recognized also along the way as one of the best places to come and work by many surveys and magazines and institutions. So my view is that we are shaping that future, but ultimately it's about delivering shareholder value. And we are going to be positioned for the next 3 years to accelerate that value, as you see today, because our stock price still undervalued in terms of multiples. Our goal is to deliver that value, accelerate it for our shareholders, and be relevant to our customers in this new environment we live in.